Hi, welcome to the video, and on Monday, Tesla has delivered its first made-in-China built Model Ys. Today we are going to go over this article by Barron that goes through what this means for Tesla and their future in China. Electric vehicle pioneer Tesla began delivering made-in-China Model Y crossover vehicles on Monday. Local production for the company will impact everything from delivery volumes to profit margins. The Chinese-built Model Y was approved for sale late in 2020, and Tesla confirmed that production had begun when it released fourth quarter delivery figures in early January. Now customers are getting their cars. So before Model Ys began delivering, Model 3 sales actually were doing very well. In December, they actually sold 23,000 made-in-China Model 3s, and in total, nearly 140,000 Model 3s in 2020. Now that sales record is still nothing compared to the 35,000 Wuling Hongguang mini EVs that they sold, but the Wulings were a much cheaper car. So when we're looking at the popularity of the Model Y, we have to take into account that the Model 3 is actually already doing very well. Back to the article regarding profit margins. Local production in China or other geographic regions mean lower delivery costs, and lower costs help Tesla make more money. That was the scenario that unfolded in 2020 with the Model 3 sedan as Tesla's Shanghai facility ramped up production. Quote, "The cost of vehicles produced in Shanghai in Q1 is already lower than the cost to produce the Model 3 in Fremont," reflected CFO Zachary Kirkhorn on the company's first quarter 2020 conference call. If you're able to build something locally with local workforce and local materials, of course that's going to be cheaper than having to import everything in. Because Tesla was so front-loaded in their investment and trying to make a fully functioning end-to-end factory in China, their investment is finally paying off now versus some other car manufacturers that insist on continuing to import parts because they're not willing to put up the large upfront costs it takes to truly get costs down in the long term. But Tesla has made that investment, and now we're going to see it pay off. Back to the article regarding pricing. Lower costs have also allowed Tesla to cut prices several times in 2020. CEO Elon Musk is prioritizing volume growth over profit margin for now. He wants Tesla to get as big as it can and produce lower priced cars for different segments of the car market. Quote, "I think we will not succeed in our mission if we do not make cars affordable," said Musk of the company's second quarter 2020 earnings conference call. Quote, "Yes, we need to not go bankrupt. Obviously, that's important, but we're not trying to be super profitable either," end quote. Tesla is selling the Model Y manufactured in Shanghai for a base price of 339,000 yuan or about $52,000 USD. In comparison, the Neo EC6 crossover vehicles start at 368,000 yuan, which is about 56,500 USD. So the Model Y is a little bit cheaper. Musk's immediate goal is not to make as much money as possible. They are trying to get this car in as many hands as possible because, again, his mission is for a green future where there are no ICE vehicles. So even if that is at the cost of making a little bit extra dough, he's looking at it for the long term and he wants to transition out as many ICE vehicles as possible. Therefore, selling the Model Y at this price point that is very competitive. Nice cars in China are very expensive because they already have a big pollution problem. So the government doesn't just allow anybody to purchase a car. There's a lot of hoops you have to jump through and fees you have to pay, but the government is very supportive of putting more electric vehicles on the road. That's why Tesla is having a relatively smooth rollout. Back to the article regarding production. Tesla will have more cars made in China in 2021 than it did in 2020 as it ramps up production of the Model Y. The company's Texas facility as well as its Berlin, Germany facility should come online as well. More capacity is important for investors. Tesla delivered about 500,000 cars in 2020. Wall Street expects that to rise to about 840,000 cars in 2021. Delivery estimates for 2021 have been rising in recent weeks. The consensus 2021 delivery estimate ended 2020 at close to 800,000 vehicles. Personally, I think 840,000 cars in 2021 is a relatively bearish prediction. I think it will probably be over 1 million, especially as all of these different facilities all over the world start coming online. Back to the article, and this is the final point regarding the stock. Investors will likely get some guidance regarding 2021 deliveries when Tesla reports fourth quarter earnings on January 27th. Delivery guidance will be a key number to watch for the stock. Shares are still performing very well. After rising more than 740% in 2020, Tesla stock is up another 17% year to date. The S&P 500 and Dow Jones Industrial Average, for comparison, are both up less than 1%. Wall Street expects the company to report per share earnings of about $1. That would be a quarterly record for the company. This is something I think we as investors should be getting used to. Now, every quarter, I think Tesla is going to beat expectations. They were in multi years, nearly a decade of a growth phase, investing a lot of money, losing a lot of money, but now they finally had a profitable quarter, and all of their hard work is paying off now. As all of these factories are ramping up, as their battery technology is getting better, as automation is coming online, I think this will just continue to grow and we're just going to see a lot of profitable quarters. Is the stock a little bit overvalued right now? In my opinion, yes, it's a little bit inflated, but as quarters continue to exceed expectations, I personally believe that it could remain inflated for quite a long time, because if the news continues to be good, it's going to be hard for people to want to sell. I'm not saying there's not going to be a correction. I just don't think there's going to be necessarily a big sell-off at any point. Things so far are just looking very optimistic. Anyways, that's it for today. Let me know your thoughts in the comment section below. How do you think the Tesla Y is going to do in China? And how is it going to compete with the Neo cars coming out as well? This is Green Knight Trading, where Squires become knights. I appreciate you, and I'll see you soon.